Ready, guys? We'll call the work session to order for Monday, August 21st. Anybody from the public that wishes to address the council? Seeing and hearing none, we will take a look at the December 31st, 2016 audit reports. The first we'll have is from the Willmar Municipal Utilities. Denise. And this is a little bit more informal, so if people have questions, they'll maybe stop you and ask you, but, so this is a work session, it's not a formal council meeting. So,
okay.
Thank you, Denise.
What included with your packets was the complete audit report. I'm just going to touch on a few of the highlights. Flipping to page 3 on the very top is the auditor's opinion that the records represent fairly the financials of the utility. And then flipping to page 37 is actually the combined financial statements for the year ending December 31st, 2016 by division. Electric total operating revenues for 2016 were $29,228,624. Less operating expenses of $23,995,902. Less non-operating revenues, expenses, and transfer to the city. Total net change in position or margins for the electric utility, $3,289,928. Water.
Before you go on,
Sure.
what page are you looking at as far as the page number on the form?
The page number on the form is 37. I understand yours were kind of scanned in a little differently, so your pages may be split. So I apologize. I don't have that version. I don't know. Steve, are you able to help him out with what page?
Fernando, that'll be page 54 for us.
Okay, that's what I was getting at. Thank you.
Thank you.
In the bottom of page 54 is the number she's referencing.
Right. Okay, that's what I was looking for. Thank you.
The Water Division had operating revenues of $2,376,497, less operating expenses of $1,749,090. Some non-operating revenues and expenses, less transfer to the city, $489,577 was the Water Division margins for 2016. Heating Division revenue for 2016 was $856,688. Operating expenses, $709,684. Non-operating revenues, less expenses, less transfer to the city, margins of $95,310. So total operating revenues for the utility, $32,461,809. Less operating expenses, $26,454,676. Non-operating revenue expenses, less transfer to the city, $3,874,815 were our net margins for 2016. Net margins each year are used to make bond payments and for capital improvements. Is there any questions on the audit report or the financials for 2016?
Ron?
Thank you, Mr. Mayor. I noticed going through the report, it's kind of an information overload for me. I mean, we had a couple hundred pages of financials. But I did notice in one section on there the revenues from 14 to 15, 15 to 16. And there was a considerable difference from 14 to 15 and even compared to 16, where 14 was the revenues were quite a bit more. What's the explanation? Did everybody go to LED lighting or?
Were you looking at just electric? Were you looking at all divisions? Do you recall? And unfortunately, I wasn't here at that point in time. I do some research on that.
I'll scroll through the 39 pages and see which one. I highlighted it, but it was
You're
a
right.
lot of information.
There's a lot of information, and a lot of the extra information is detailed by division.
Would it be electric or?
Electric was down by about $500,000 for revenue.
I'm looking for the yellow highlight here.
And you were looking, it was a decrease in revenue?
Yeah, from 14 to 15 and compared to 16 also. Where in the world is it here? A lot of blank pages here.
Electric is the largest portion of the revenues, and that's on page 57. of our packet.
7,
57?
57.
Mr. Mayor. Councilman Christensen, I do vaguely remember, I remember there was one point that when I was sitting for former Councilman Dockin on the Municipal Utilities Commission, I'm not sure if this falls in line, but there was kind of a financial anomaly at one point when the bird flu came through. I do remember seeing the numbers and doing a year-by-year comparison, and I remember it sticking out that there was an 18% decrease in revenue overall, an 18% decrease in revenue during that time period. I believe it was a 3 to 6 month time period. So I think an 18% reduction over these kind of numbers would probably result in revenue decrease that could line up with this.
That was actually referenced in the comments.
Yeah,
Yeah, I don't know for sure, but I remember the discussion.
they did, they noted that in the report for the 14-15 year.
Councilmember Christensen, did you find what you were looking for?
No.
Okay.
Mr. Mayor, if, for those council members would be looking at the heating division, that would, there has been a decline in the revenues in the heating division, and you're familiar with the discussion about decommissioning that, so that might be one of the areas that you're looking at.
But you were talking an overall substantial decrease, right, Councilmember Christensen?
Correct.
Any other questions for Denise? Quick. Councilmember Fagerly. There's a bug here. Oh, okay. Sorry. See, all I seen is this wave next to me, and I'm going, okay, what's going on? Does he want to talk? He normally doesn't do that. He doesn't move quite that much, so. Okay. Well, you got my attention. That's a good thing. Councilmember Mescu, was that okay? I called on him for that? That's just great. Okay, good. Just checking. Okay. Well, it doesn't look like we have any other questions. If you could just sit just for a little bit, if Councilmember Christensen finds that piece, then we'll call you back up, so.
It's on page 49.
Okay, yeah.
My
that is-
page 49. Is your page 49 the same as ours?
It is. Yeah, and I was just flipping through too, actually, both the electric and water were increases from 14 through 16. So the only one that has been a decrease is the heating on that page. And that would be, you know, relating back to the discussions of making the investment in district heat and having to double the numbers when we're losing so many customers at our present rates. So that would be the reason for that decline, is we've had continual decrease in customers switching over to different heating sources. And
Correct.
ultimately, that's been the decision to decommission the district heat in 3 years.
Okay, thank you.
Thank you.
Thank
Appreciate it.
you.
Thank you for your comments, and thank you for the report that you gave us. So appreciate that, so, yes. Next, we'll have Rice Hospital, and we'll have Mr. Bill Finsky. I see you have Mike Schramm with you, so is he your bodyguard for tonight?
No, he's going to answer the questions I can't answer. So thank you for inviting us to present. The audit report that is in your packet includes all of Rice and its entities, which would be the hospital, the care center, home medical, and the Rice Health Foundation. So turning to the bottom of page 1 is the independent auditor's report. And like the utilities, the hospital had a clean audit opinion, and so we're very pleased about that as well. Pages 3 through 7 talks about the management discussion. We briefly overview what occurred this past year, and that's for your information. I'd like you to turn then to page 8, and we'll talk about the balance sheet of the statements of net position, which are shown on pages 8 and 9. Rice's total assets increased by $22 million this past year, from $140 million of total assets to $162 million. Liabilities increased about approximately $20 million, and then our net assets or net position increased by a little over $2 million, from $34.2 million to $36.4 million. Turning to pages 10 and 11, which are the statements of revenues, expenses. Revenues went up about $9 million this past year. from $99.2 million to $108.2 million. And then expenses also increased. Those expenses increased to about $10.5 million from the prior year. A substantial component of those expense increases was the adoption of GASB 68 and 71, where we had to recognize the unfunded liability of the para program. So Rice incurred an additional expense this past year of $2.6 million just related to that recognition of those expenses for that unfunding. That's a separate line item in the expenses. It's line item 3 called amortization of pension adjustments. For 2016, that number was $3.3 million of expense. Pages 12 and 13 are the cash flow statements, which are there for if you have any questions. I'll certainly answer them for you. And then starting on page 14 through page 37 are the notes to the financial statement, which go through all the various information on our policies and all the different various major categories that are shown up on the balance sheet. And then the last section that we have go to the combining statement of net position. This is where we bring the organizations together, meaning we bring the hospital, care center, and a home medical together, and then we show the foundation as a separate column. And then we have our eliminations for intercompany activity, and then we have our combined total that flows forward to the front position. So overall, Rice had a positive year. We generated positive income of $1.7 million, down from where we were a year before that at $3.4 million, but the bulk of that was related to that pension funding expense that we had to put on our books. And so with that, I would entertain any questions.
Council, any questions? I guess Mike gets off easy tonight, so.
Yes, so.
Thank you for your report. Thank you for the
right.
good work you're doing.
All right.
And thank you for your comments as well.
thank you.
So you have a great evening.
Thanks.
You bet, bye now. You could stick around if you wanted to enjoy the evening.
Have a good night.
Thank you. Next, we have the comprehensive annual financial report. David.
All right, well, thank you for having me here tonight. My name is David Early, work with Westberg Ishins. The comprehensive report actually includes the hospital and the utilities all rolled into one, but I only do the audit on the city portion, and the others are audited by others. I would like to start tonight by just going over the governance communication letter. There's just a couple of things I'd like to point out on that. Is everyone able to find that?
Well, my computer just crashed, so I'm trying to get it to reboot, so does everybody else have it with the exception of the mayor? Which
The governance communication letter?
Mr. Mayor, members of council, that would be on page 284 of your electronic version.
Thank you, Steve.
My numbers are-
284.
Yep.
I think
All
everybody's
right,
with you.
ready?
Yep.
Okay. On the second paragraph, what we usually describe there is if there's any major changes in the financial statements, and for 2016, the city had implemented GASB 45, and what that is, it relates to employee benefits that are paid after retirement. In this case, you have employees that can stay on the health insurance after retirement, and so there's actually some sort of benefit that they are basically having to account for. And so that's been adopted, and as a result of adopting that, you actually recorded about a $300,000 liability on your financial statements. And that's cumulative over several years. It's not going to change dramatically year in and year out. Unlike the pension liability, for the city, your pension liability actually changed $8.3 million. And just like the hospital and utilities, everyone's seen a large change in that just because they changed how they're calculating it. Now, you wouldn't expect it to swing that much, but because they lowered the discount rate, it really showed a big liability. I think it probably increased your expense for the year by about $1 million, because you don't have to recognize that whole $8 million in 1 year. Otherwise, you'd have an $8 million loss. So that's going to be amortized over the next 5 years, but it's still obviously a major impact. Turn you to the second page on the communication letter. Under the recommended policy improvements, just a couple things I'd like to talk about. On the budget management, and I know this is pretty much the same recommendation I had last year. When a department goes over budget, there should be a process in place that the council approves it or does a budget amendment or something to that effect. Because essentially, when you do adopt the budget, it is at the department level. And so the council should have to take some action. So typically, you do some budget amendments throughout the year, but there typically is a couple departments that will go over budget. Now, if you look at total in the budget, the city never expends more than what the budget is in grand total, but you do have some issues on certain departments once in a while.
Could you give us an example of where that should have happened that we didn't do it?
Yeah, when we get to the financials, I'll look at the budget report and just show you some department totals. Because there's a schedule in the financial statements that show the actual and compare it to budget and shows what the variance is. But I don't know which departments off the top of my head right now, but there's probably maybe 3 departments that were over. The city administrator one was for sure just because of payroll expenses. Obviously, you had some turnover there, and that probably accounted for additional expense, and you had to hire an interim. So that department specifically was over because of that.
But didn't we resolved it with either I guess it was a resolution, I recall.
There was no budget amendment or anything on that.
I think what he's talking about here is that when you have a particular budget code that goes over their budget,
We need to address it.
we need to address it, and it needs to be identified by the
Yeah.
council. The council has to reconcile it. So in the past, we kind of reconciled that all at the end.
Okay.
I think what he's recommending is that when those things happen, the council be made aware of it so that the council's just on notice that, as an example, and I'll just say the fire department is over budget. So they take all of those codes and put them all together, and so it's the total budget. It's not a code budget, because the code budget would be handled internally.
Right.
It's the overall fire department budget. Steve, share with us an example of that. So like the fire department would be under a different code than like Public Works, correct?
Yes, Mr. Mayor, members of the council. Past councils have indicated that they wanted to make adjustments at the end of the year. David's right, last year audit, we talked to the council and the finance committee about doing it periodically throughout the year, maybe 6 months or quarterly. And with the committee structure going away and the positions, the way it happened, there was a number of budgetary actions that the council did not do. There may be administrative or council action to do. Example would be salary adjustments for 17. We'll be having to bring back to you budgetary amendments to handle the action that the council did. It's kind of a twofold process. It could be handled at the same time and should be. When you take action to award certain contracts or certain adjustments and they haven't been factored into the budget, you should be taking action to adjust the budgets as well.
But there were no work sessions last year, so we certainly could have done that last year. That was not because of a work session versus a committee. You had committees through the end of the whole year. So it could have been done through the committee process last year. It just wasn't.
We need to do it during the course of the year is what he said.
Great, yeah. When they go over, the council needs to be made aware that they went over.
Right, and if you monitor it quarterly, you'll be fine. And obviously, a lot of those could occur at the very end of the year.
Right.
And so mostly that's just having some mechanism in place where they can predict. I mean, when it comes to salaries, if you hire someone new, obviously you want to do a budget amendment, and that's predictable. But once in a while, there may be some purchases at the end of the year that you didn't account for in the budget. But
Councilmember Nelson?
No, I think you answered my question, because I think we had talked about doing it quarterly. You just said quarterly was often enough to do it, correct?
yes, monitoring the budget
Thank you.
and making any adjustments at that point.
Can someone from staff take a look at this computer?
Do you need a cord?
It just won't load the work session. I had it up earlier and it just crashed, it went down, I rebooted it like 3 times, so. Yeah, here, you might need this.
Big hammer.
Sorry about that,
Nope,
David.
that's fine. The other policy improvement I have listed on here is regarding your fund balance policy. Currently, you have a lot of items that are under the classification of committed, and really, in order to do that, the council should be taking a resolution and specifically identifying those dollar amounts and what the specific commitment is. You know, you have several items that, like in the charter, for example, it does require that you have some sort of reserve, you know, so in that case, I think you should actually approve a specific dollar amount, what you want to put aside as a reserve in the budget. You know, but there's many other things, you know, you have like your self-insurance at $1 million, you want to set that aside. But all those types of things, I think you should be very specific on those items, what you want to use that money for, and put it in a resolution. And then if that money if you need to use that money for any other purpose, you'd have to do another resolution to uncommit the money, essentially.
Councilmember Nelson?
So we've talked about those fund balances before, and whether the amounts in there are appropriate. Do you have suggestions for, I mean, how other cities do this? Because I know that we get criticized sometimes about how much cash we have sitting.
Right.
And the answer is that the council has dedicated or allocated that. But is there somewhere for us to go to know what is appropriate for fund balances?
I mean, in most cases, it really comes down to what is your level of comfort. I mean, if you're down to 50% of your next year's budget, that's probably getting to be a low fund balance. But if you're at 75%, I mean, most cities don't operate at 100%. Typically, your fund balance is at 100% of what you're expecting to spend in the following year. And a lot of those items you have set up that are basically contingency reserves, but not necessarily, it's an unknown contingency, you know, so you may have 2.6 set aside just for budget shortfalls, and you don't really know when that's going to occur, but that level, maybe it's too high for you. Or even with the self-insurance, you have the $1 million set aside because that's what your deductible is. Now, you could have a lower level on that also. So that's why I'm saying most of that is what's your level of comfort in terms of going forward, you know, because it really is kind of a management decision and what you can forecast in terms of your needs. Now, obviously, spending down the fund balance is kind of like a one-time deal, though. You know, that's money that can be used one time. Of course, then it's not a recurring thing every year. So for the most part, in my opinion, the fund balance is strong. It doesn't necessarily have to be that amount. Like I said, it does come down to a level of comfort. And if you can foresee that there's going to be some budget shortfalls, you know, with the state, the way it's operating, you know, if things go bad, you know, LGA is one thing that they tend to cut. Now, with the economy being good, the state's got surpluses. You don't foresee that happening, but you just never know. Any other comments or questions on that?
Yeah, I would just, what I'm hearing is these two kind of sound the same. It's sort of, you know, doing a policy governance piece. You're basically recommending that we articulate exactly where you want our fund balances to be, articulate
the specific purpose.
Yeah, and that's all it is. It's upfront kind of articulations. You're not
Right.
recommending any numbers here at all, but you're saying.
Correct.
In our best interest, it would be to actually do that. I think that's something we talked about doing last year, and I think it did get lost in that idea from when we switched from having committee structure to working session meetings. If we're going to continue with working session meetings, these two recommendations are critical. I think we need to do them as well.
Yep, and obviously you had some turnover in the administrator position, so just having some stability there would basically allow you to take care of some of those items, so.
Thank you.
Mr. Mayor, on that issue, the council does have a fund balance policy. I think what David is recommending is that each year you take official action on the direction that's in that policy, because that policy does talk about the cash flow reserve, the insurance reserve, and those levels that are set in there. And so that, I think, is the recommendation, that annually you look at that, as well as annually as you review the investment policy. So get that into the process.
Okay. Go ahead, David.
All right. The other handout I had was the City of Willmar, the 2016 presentation, the handout that has some graphs in it.
That would start on page 287 of your electronic version.
That's good to know.
I can understand your information overload when you look at the 300 and some pages total you have tonight, but was everyone able to find that?
Yep.
On the first page, what we're looking at here is just the general fund revenues, and mainly what I want to emphasize there is what the top three sources of the revenue are that go into your general fund. And the top one is the intergovernmental, which is made up of primarily your LGA. Then you have your property taxes, and then you have the enterprise fund transfers. So between those three, they typically make up over 80-some% of your budget. Now, obviously, intergovernmental is a big part of it. 35% is pretty high, and that's just part of your budget that you don't necessarily have control over, obviously, with the state being able to change things. And really, LGA has been one of those things that in 2014, you had a nice increase, but since then, it's been pretty flat. It doesn't really keep up with inflation. And I know every year when they're meeting, that's a big discussion on what to do with that, and I know they haven't really come to any agreements on that in terms of substantial increases on that, so. Any comments on that? Otherwise, turn to page 2.
Well, just one quick comment.
Sure.
It just, what sticks out to me was the property taxes from 15 to 16. If everybody noticed that? It went down.
I'm sorry, would you say that again?
Pretty close to the same.
Sorry, could you say that again?
The
Yeah,
property
from
tax
15 to
revenue.
16, it went down a little bit. Could
Ad valorem tax.
Sometimes the timing of delinquent payments could influence that.
Yep.
If you have a lot of delinquencies in one year and you catch up the next year, but I believe your levy was approximately the same, though.
The levy stayed about the same, but would that be reflected because of the
These are
tax
the,
abatements we did?
these are the, that would have one effect on it, but these are the actual numbers as well. And again, the delinquency would have a direct impact. Abatements would show up as being collected and then paid back, so it really wouldn't impact the actual revenues received. That's how we account for tax abatements.
Yeah, delinquencies, anything collected after year end is not included in your revenue. You're only recording revenue as far as what was collected in that particular year, so.
What one has to remember is these are the actual collections and not the certified levy. And the second line item, I'd just like to point out there, you may notice that in 2012, there was no franchise fee. The council reallocated or reclassified the RAC 8 franchises into the general fund starting in 2013. Prior to that, it was a special revenue fund.
Correct.
Mayor?
So you're saying, should we know what that delinquency number is too then? Does it show up somewhere in here?
It does, trying to think, does it?
It would show up in the detailed, in the full report. It runs somewhere between $80,000 to $90,000 a year, again, depending on timing. And I think we're at like 98.5% collection.
Okay, that may explain some of the difference in there.
Then it's always collected normally in the following year.
Yeah, your collections typically are pretty high, and it does catch up.
Thank you.
Councilmember Osmus. Osmus.
In the miscellaneous income
Yes.
in 2014, is there an explanation to attribute that spike?
Yes, one thing that influences that number is the unrealized gains and losses on the investments. And in that particular year, I believe you actually had an increase in the investments, so there was a larger gain. That number is also influenced by refunds and reimbursements, like you have insurance flow-throughs and things like that. So miscellaneous is very heavily influenced by different things that are not that predictable necessarily, especially like gains and losses on the investments. It's the unrealized. Like for example, in 2016, I think the total losses were actually about 400 and some thousand. And so that reduced your miscellaneous by that amount, so.
It just seemed like a pretty significant increase from 2013 to 2014.
Right, yep.
Mr. Mayor, if you'll notice that 2013 had a substantial drop from 12 and 15 comparative to 15 and 16. So on the average, it is about 800,000. I'll talk a little bit about that in my July report as far as the market values and our requirements in recording that.
Yeah, it's more or less an accounting requirement to record the actual fair market value. It's not that you sold investments and lost that kind of money, so.
And for the listening public's information, so our taxes that we collected in 2015 were $4,472,103, and in 2016, which Councilmember Christensen pointed out, was $4,458,129, so a decrease of about $14,000 approximately.
Correct.
And then our overall taxes, overall revenues, general fund for 2015 was $15,301,375 compared with $15,317,237. So a difference of about $16,000.
Correct. Okay, on page number 2, what we're looking at here is the general fund and the capital improvement fund. Now, the capital improvement fund is the fund that you use to make large capital purchases. It doesn't include any street projects. And I think it's worthwhile to look at both of those funds together. As you can see, over time, the capital fund has actually decreased because you've had some major significant expenditures out of there. But overall, if you look at the general fund, you basically are maintaining around $14 million in the general fund each year. Any comments on that one at all? Otherwise, on page 3, we're comparing the fund balance to expenditures, and that's just one way to determine how strong is your fund balance. I mean, if you have your fund balance greater than what you typically spend, you have more than 1 year's worth of fund balance on hand at the end of the year. Like I said, that's typically a very strong fund balance. And again, what it ended up being, about 98% of that's actually available and unrestricted. So it's 98% is basically restricted internally, not by outside parties. So. Comments on that one at all? And then the final one is
So David, just to go back to that slide just for a minute.
Yep.
So kind of what you're saying there is that we should have not less than 50% in the fund balance over the expenditures for the year.
right. That would be a very minimum amount.
Right, and so to tie your first opening comments to this slide is kind of what that says.
Yep.
And currently, the city has in their fund balance $15,904,653, and our expenditures are
yep.
$14,733,606. And so I'm just giving those numbers so that our listening public can get those. So
Right.
you'll see that we're overfunded by an annual operating of about $1,200,000, $1,200,000 approximately.
All right, then on page 4, the waste treatment fund, the last few years, you've had rate increases because obviously there's been a lot of capital improvements in that fund. And the rate study that you had done, I believe it was 2012, recommended increasing rates. And as you can see, the whole purpose of that was to build up your reserves in that fund, and it has been happening that way. So your expenses are pretty flat, and your revenue keeps going up, so your increases in your revenue are going right to the bottom line, allowing you to build up some reserves in there, because I believe the rate study was recommending at least 3 months of operating and a full year's worth of debt payments in there. And you're currently on pace, and you exceed the amount that they were expecting at that time. So overall, the waste treatment fund obviously is going well. I know there's a lot more improvements you're doing down the road, and that's kind of an ongoing thing. And I do believe the rates were scheduled to go up in 17 also, but I believe after 18, or in 18, there was nothing scheduled. And you may have to reconsider that, just based on future debt loads that you have to take on. But as of 2017, that was kind of the last year in terms of the rate study, what they recommended, increasing rates. So.
Right, and so the council hasn't seen the budget yet, but like you said, the 2018 doesn't show an increase in that rate study at this point unless council wishes to do something different. So you're saying that our numbers that we have for 2016 year end, you feel those numbers are healthy?
Yes.
As well, is that what you're saying?
You're at the level that you're trying to get to. You do have over $8 million in investments in cash built up in that fund. And so that does provide you that reserve of the 1 year's debt, because your debt payments in total are approximately $2.7 million at this point. And then 3 months of operating expenses are also covered, so.
Mr. Mayor, that 2-point-some million is the principal. The total debt is about $4.5 million for debt service payments.
Yeah, it says 4.398.
Yep. And obviously, you will be paying some off. I believe one of those loans probably is paid off in 17.
Yep.
But I know you've taken on some additional debt, so.
Right.
Now, as far as the financial statements, obviously, you can't go over a whole lot of this. I mean, like you're saying, a lot of information in here. I just want to go over a couple things. On the audit opinion, we issued a clean audit opinion, meaning that the financial statements represent the true financial picture of the city, and they meet the requirements. The one thing I do want to talk about is findings. If you can turn to page, it's actually V111, or III. We're using Roman numerals. Do you happen to know where the findings start, Steve?
I will locate it.
155.
Page 155.
So what I want you to look at is the Minnesota Legal Compliance, Section 5. So it should be Roman numeral 8-1 is what we're looking at.
Where is it?
164.
Okay.
Page 164?
I believe that to be correct. Yes.
So finding number 2016-001, what we're referring to there is that the city has to have collateral on your deposits, because of the amount of money you have in the bank. The FDIC limits doesn't cover everything, and so then you need additional collateral. And at the end of the year, you actually didn't have enough collateral, and so that basically is against the Minnesota compliance. And part of the reason that occurred is because of transitioning your responsibilities. Kevin, the city clerk, used to handle all that, and then last year, some of that was transitioned to the finance department. And so, and obviously, I think with Kevin doing it for many years, he kept up on top of everything. He knew what needed to be communicated to the bank. In this case, the bank tried to project what they needed for collateral, but they apparently didn't know about some larger deposits at the end of the month of December, and so they didn't actually have enough to cover that. And so I believe that's one of the things that's going to be changed now, is that the communication between finance and the bank will be, they'll let them know when the larger deposits are coming in, especially when you get your large LGA payments, you get your large tax settlements and so forth. So. Does that make sense at all?
Yep.
Okay. Compliance finding 2016-002 has to do with automobile allowances. The state auditor's opinion on this is if any individuals get an allowance for their auto, they should not get reimbursed mileage. And so they're kind of saying that you have to have one or the other. You cannot have both. And I know there were just some employees that had reimbursements on the mileage if they traveled outside the county, I believe is what the policy was. And so that policy has to be revised. You have to do one or the other, strictly an allowance or strictly a reimbursement. So.
And how we're handling that now is that the administrator's handling that, and then at the end of the year, when we update all of our personnel policies, we're going to update that at that time. That's how we're going to handle that.
Okay. Yep.
So it'll be addressed for the next audit findings.
All right.
Mr. Mayor, are you saying that we are going to be in compliance with this, and
Correct.
we're now?
We are,
Not going to be paying both?
correct, we are no longer allowing the mileage reimbursement, as was just identified, but for it to come back to council, for the council to act on it, will be done when the other personnel policies are adopted. But the city administrator administratively is not authorizing any of those expenses. That's what's been talked about.
No.
No.
Respectfully, no. The answer is no. I have been paying those. I've been authorizing those from, in particular, it's department heads that receive a car allowance, and then they go to the cities or whatever, and then they come back and then they file a travel document. I've been paying those.
Right, but we had a conversation 2 weeks ago that you were going to stop that practice.
No,
In your
you gave me
office.
the instructions to continue to pay it. That's because I had that conversation with Steve, and I said, he instructed me to continue to pay it. So that's what I've been doing. And then, in fact, I submitted documents for myself after that you gave me those instructions, because I did not submit things for Rochester, but then when you told me it was authorized, I submitted my own documents.
I would
Councilor Meskey.
recommend that perhaps we look at the policy before the end of the year to clarify that.
Sure.
So we don't have to have any misinterpretation among staff. The council can just weigh in on it and straighten the policy out. That would be my recommendation.
Sure. So we should bring that back to the next council meeting.
You want me to put it on the agenda for the next meeting?
Correct. Unless you want to deal with it at the meeting after this. I mean, we could deal with it at the meeting, because it's a simple policy is all we have to do.
No.
I just want to make sure, I mean, it can go either way. It would be nice to hear which way staff would have preferred it to be. I guess that's I mean, if we can't do it both ways, and we're doing it incorrectly, and we're hearing it from the auditor to do it correctly, I say we need to figure it out, but which way it needs to go, I do not know.
Right. Generally, the allowance is much easier in terms of administration. I mean, it's just built right into their normal pay, so less paperwork that way. But I think that, I don't know how many people you currently have in allowance, but my understanding is the administrator actually has it built into his contract, so that's something you'd have to address also.
No.
Councilmember Nelson.
I think we need to have a discussion about that, because that was a fundamental question, because it's unequitable right now, because some department heads get the same amount but don't drive anywhere, and other department heads drive every day. So that was the discussion we had when we took a look at this, and I think we have to go back to revisit what is our goal for this? Is it strictly reimbursement? Is it to create, a car allowance versus reimbursement of expenses? So I guess I think we have to revisit the subject if we can't do what we put into practice.
Yeah, and when we did it, the council will remember that we did ask that question, can we do this or can't we? And we were told we could, that's why we did it. So, and now we have to correct it, that's what we have to do. We just have to make it right.
All right. There is one financial statement I'd like to go over.
Just one more question here.
Certainly.
Councilmember Osmus.
So when are we going to do that?
Well, we need to, we can't do something that's against the law.
Right.
So we have to stop that practice, I would say, right away. But what I'm hearing Councilmember Meske say is he wants it to come to council. I think we should direct staff to not authorize any more expenditures until it's reviewed by the council, would be my recommendation, but it's up to the council. Councilman Schwantes.
Mr. Mayor, I'd recommend, I think there might be a bit of discussion on this matter, that we bring it to the work session rather than the council.
Okay. Councilman Meske.
I would agree, but in the interim, there needs to be an understanding that we're either going to pay the allowances or we're going to pay the mileage. And I'll leave that up to the administrator to figure out which way that is. We can't pay them both until we have the discussion, but to not pay any travel in the interim seems unreasonable. I think we should continue to pay which one it is going to be, just not both.
Yeah, just to clarify, it's the same person can't get both.
Right.
But you can have a policy of certain individuals have an allowance, certain people just get reimbursed. Correct.
Well, I was just going to say, in my contract, it says I receive both.
Right.
So I just, we should treat everyone one way or the other, I guess. So if we're saying that's invalid in my contract, or is it invalid with all employees?
Well, I'm hearing it's illegal in any contract.
Right, and that was the state auditor's request, and I've read that report. And I've also was told that back in April or before I got here, that the council had resolved this issue, that they were going to continue to make those payments. And so that was my understanding.
Correct. It did come to us, and we did talk about that. So, Councilmember Osmus.
Just to make it easy for now, or maybe even in the future, if somebody has to travel outside of the city, isn't there a city vehicle that they can take? So we wouldn't have to deal with reimbursement?
We do. We have a nice Ford Explorer that people can make arrangements to take that vehicle, especially those like myself that receive a car allowance. So if you're traveling to Fergus Falls or whatever, you can take the Explorer. You just need to make arrangements. And we have lots of pickups, so there's no shortage of vehicles. You just can't take a police car.
With red lights and sirens. So they could take a fire truck?
Maybe.
Okay, go ahead.
All right. What I'd like to look at is the statement of revenues and expenditures. It's page 18 on mine, but
Are you,
the governmental funds, the income statement essentially?
you're comparing them to budget?
Nope, just the snapshot of the governmental statement of revenues and expenses. It's page 18 as far as the page on the actual financial statement.
187 for us.
That's correct.
Thank you so much. On this one, this kind of just gives you an overall snapshot of your different funds. The city's a little more complex compared to this hospital and the utilities in terms of you have lots of funds. They basically present their financials and they have one fund. What number I would like you to look at is as you get towards the bottom of the page and it says net change in fund balance. A positive number means your revenue is greater than expenses. Negative number means your expenses are greater than the revenue. So as you look at the general fund, $302,000 to the positive. And I know your budget actually had planned on up to, I think, $900,000 negative. So you're well within the budget on that whole fund there. The special assessment bonds, that's all the bonds that you've issued for all your street projects. That had a net increase of $208,000. Most of that increase, obviously, is just influenced by special assessments. I mean, that's primarily how those bonds are being paid. The water capital projects, or street, water, sewer capital projects fund, that's all your major projects that you've been doing, except for, if you do lift stations and things like that, that's not included in here. This is basically your street projects. And as you can see, the fund balance decreased by 1.8 million. That's strictly just a reflection of timing of when you're expending the money. Because obviously every project has a set budget, and every project typically goes over a couple years. So no real alarm that it went negative in that case. Industrial Development Special Revenue Fund, increase of $220,000. Primarily, you sold some of the lots in the industrial park. And so it's kind of replenishing that fund. So at the end of the year, you had $1.26 million in your Industrial Development Special Revenue Fund. So the Community Investment Fund, that's obviously a very important fund for you. That helps fund some of these major projects, and it also helps pay back the debt. So if you look at that one, $290,000 increase, and so your fund balance was $9.25 million on that. So. And, essentially, that fund really does help you in a big way. And I don't know if you have a minimum fund balance in that or not, but, 9.2 million. If the interest rates were better, obviously, you'd be making a lot more money on it. It would be great, but. So. Any comments on that at all?
Okay,
Looks like we're in pretty good shape.
Yes, yes. I'd say you are in good shape. Kind of the way I look at it, you're in a position where you can make different choices about what you need to do. You're not in a crisis mode or anything. Obviously, your challenges in the future are you do have some major projects that you want to get done. It's going to cost some money, and how to fund that obviously is a big part of what you're discussing now that you're doing budget and all that. And I know sales tax was a big part of that, and I know you're going to revisit that too also. But overall, I think the strengths of the city, you've got good operating reserves. You've set aside that community investment fund that's worked for you over many years. I think you've got very good employees. They seem to be very dedicated in what they're doing. And the fact that Willmar's in a good situation in terms of you're a regional hub as far as the economy. And obviously in our area, the economy's not doing too bad. And I think, the fact that you're adding more businesses to the industrial park, that whole project seems to be on its way, and you're adding business. That's a great deal too. In terms of future challenges, most of outstate Minnesota has a lot of demographics that are changing rapidly, and mostly to do with age. We just have to face it that we're all aging, and the population of young people isn't growing as fast as the old ones. And so that's kind of a long-term thing that most cities outstate Minnesota really will be looking at. I mean, in the next 10 years, there's dramatic shifts in that. And I was looking at some statistics today, that the Minnesota deed puts together. They're projecting population in our area is going to grow, not rapidly, but we're not losing population at least. But the fact is the population will get older in this area. So that's one challenge that not so sure how everyone will end up dealing with that. But obviously trying to attract younger people to town is always a positive too. So. Any comments or questions?
Comments from any of the council? Okay, thank you for your report, David. Thank you for your comments.
Thank you so much.
You bet. Next, we'll have the Finance Department Monthly Report. Mr. Okens.
Thank you, Mr. Mayor, members of council. If I could just touch on a few other things for the financial report. It is lengthy, and there's some sections, though, that I would encourage the council to kind of concentrate on. Sometimes a person can get lost in all the numbers. And so if you look and you start on page 169 of your electronic version, it's pages 1 through 10. It's the management discussion and analysis. it's a somewhat summary of the position, the financial position of the city. And so it's kind of the meat and where are we sitting financially. And so when you get time, I would encourage all of you to review those pages in your financial statement. The other sections in the financial statement, basically starting on page 180 and of your electronic version, and that's some things maybe that we have to discuss about staff is the electronic versions and page numbers versus the page numbers in the actual documents, and it was quite obvious tonight. But that is the kind of the total financial statements. They kind of give you an overall picture, but sometimes the detail is where you really are looking for. So it's kind of an overview of your financial statement. Then on electronic version, page 195 is your notes. That, along with the management discussion and analysis sections, are what I would say are the most important. The notes have a number of different sections that talk about the component units. It explains the city, its component units, how they're related, how the totals all kind of fall together, similar to what the hospital had mentioned in their report when they have different divisions, and then they have a total overall, same with the utilities. In that footnotes, we also talk about the deposits and investments. We spell them out in great detail in talking about where they're at, lengths, and we'll talk a little bit about that in my monthly update as well. We also talk about the long-term debt. Where is the city overall and how the component units relate to that, hospital and utilities. Then we talk about the fund balance classifications. David talked on that a little bit, and we do have a fund balance policy. We will be bringing that back to the committee for an annual review now. That has changed. In that fund balance policy, there are sections that talk about certain levels and administratively have been handled in the past. But with the auditor's recommendations, we will be bringing that annually to have an actual resolution. And so if the council wants to amend those or change those, we'll be talking about that also during the budgeting process. So maybe instead of the first of the year, we want to do that during the budget process. So if there are some major projects that the council wants to fund by the use of fund balance policies, you got that timing and can do that at that time. And then the last section in the notes is the pensions on GASB 68 that we talked about, a major adjustment that we had to do, and those are kind of accounting things. But the total report, again, the two parts that I would recommend you concentrate on are the management discussion and analysis and the notes. There are detailed sections that tie into the summary totals, and then there's some statistical sections that we throw in there for comparative purposes with other communities, just to kind of give you an idea of where the values have been. Those are some things that we'll have to work a little bit more on now that we have to deal with the county on the assessing and get the values and those types of things. But those are all sections, again, when we go out for borrowing or go out for debt that the bond buyers look at. They like to see those sections. They do comparative things. They do a lot of that. So just a little bit more on that whole report.
So just for clarification, so on the notes, we're talking 40 pages?
The notes, yes, I show are 26 through 61.
Like 195 to 231?
Yeah, and that's the electronic, yeah.
Yeah.
In the actual report, the pages are 26 through 61. And if there are any questions, when you do see those, if you want to call the finance office or somehow let us know, we will certainly see what we can do to explain them or get additional information. With that, Mr. Mayor, what we've put together for today as far as our monthly report is our cash and investment portfolio, a little bit of discussion about that, and a financial snapshot on July 31st for the general fund and the waste treatment fund. We are in the process of the 18 budget process. These numbers, as well as this report, will be front and center as we work through that process as well. So it's not like these reports will go away. Hopefully they will help enhance our discussion as we work through the 2018 budget when we get to that. As David mentioned, our office was reassigned the duties of investments, dealing with our brokers, dealing with investing of the funds. We set up internal controls, so where it requires at least 2 signatures. The three positions, and the council took action on a resolution, is the city administrator, the city finance director, and/or the accounting coordinator. It takes 2 of those 3 individuals to take the process of getting bids and placing the investment. Our office, again, was reassigned these duties in October of last year. A number of the items that you see there, and I do apologize, in our monthly report, we normally have the purchase date. You'll notice that the maturity date here, that we are really short in the short term. A lot of that was due to the portfolio when we received it. A lot of that was driven by the market, was driven by the upcoming election, driven by a number of different economic factors. And we do get monthly updates from Wells Fargo, Smith Barney, a number of the financial houses as far as what their projections are. You'll see here that the items that I want to really point out in this slide, you'll notice in the middle of the screen there, you'll have a 1% to 6%, and they call that a step-up investment. It's a Federal Home Loan Mortgage Corporation investment. It's allowed by statute. The interest rates step up from 1% to 6% throughout the maturity of the investment. A number of those investments were the most attractive at that time and even going forward. It's kind of a hedge on the market. In October, we had a pending election. There was a lot of uncertainty of who would be elected, what would happen, even in the first quarter, second quarter of the year. And so the step-up was kind of a good investment. It was handled primarily by the former clerk. It was kind of a hedge on interest rates if they would be going up. At that time, we had been experiencing a number of called investments. When you had a 2% or even higher, they were calling a lot of those investments. And when they call an investment, they basically can turn the investment around and offer it at a lower rate. And so we had investments that had given interest rates, but they were calling them in because they were callable. There's callable versions on the investments. So that's why I think the strategy at that time was to do the step-ups, to try to eliminate some of that, plus possibly have a higher interest rate as we go forward. As we get closer to those maturity dates or even on the call dates, depending on what the market or the investments do, we could lose those investments and are probably planning on doing that. As we lose, or if they call those investments, we will be laddering our portfolio. Our strategy is to ladder it and to move more of the investments in the short term so that we meet our cash flows and we don't have to go out and sell the markets. David talked about the market value. That requirement, we have to record that on a quarterly basis that the council has chosen to do. And so that's why you see the difference between the far right column and the par value. The market values of those types of investments right now and they only would be that if you were to sell. And so when you have an end-loaded portfolio, if you need cash and you don't account for it, you would have to sell and could do that. And that's why we're looking at laddering it and moving some more of our investments in the short term. Again, on the second page, you'll see a lot of these interests where they're step-ups. Both Fannie Mae and Federal Home Loan Mortgage Corp. We have a number of brokers that we deal with, and those brokers, when we got the portfolio from the clerk's office, he had a number of brokers. He had 2 with Wells Fargo, 2 with Morgan Stanley, a Multi-Bank Securities, and UBS Financial Services. Those are our brokers that we deal with. Because we have investments we will be phasing out and dealing with one broker from one institution. So if we have a U.S. bank or if we have a Wells Fargo, we'll only be dealing with one broker. We won't be dealing with two different. But since we have some investments with both, until that kind of through attrition, we will maintain that. And those are all listed, all approved by the council. Our main checking account is with Heritage Bank, but we are dealing with other institutions, other local institutions, and having conversations for having a clearinghouse account where we can move money in, move money out. And the reason we're having that discussion is because it's a better rate than what we're getting presently with our Flex Gold at only 0.23%. Some of the history behind the accounts, the city is with Heritage, Rice Hospital, and this was before my time. Rice Hospital and Municipal Utilities, the three entities used to circulate their different accounts amongst the different local institutions. Prior to my coming, they decided that was costly, not only for check stock and those types of things, but it made more sense just to stay with one entity. And so whoever the entity was with at the time that decision was made is who they are with today. We're with Heritage Bank. The hospital is with Bremer, and utilities, I believe, is with U.S. Bank. But we are having conversations with other local institutions, and some of that is due to their willingness to step up to the plate and place our debt the last 2 years as a collaborative effort on the local institutions. And so that will be beneficial as well. And we're having those discussions again this year as far as the local institutions. One thing I would like to point out here is you'll see that the Flex Gold had $8 million at the end of July. That number is now down to $4 million. The debt service that we talked about on the waste treatment plant, we have debt service payments due in February and August. And so a large portion of that, $4 million, went out in August. We also are having about $1 million that will need to go out before the end of the month. The list of accounts payable that you'll have in your council packets. This month we happen to have 3 payrolls, and we also had conversations with the engineering office, and I got an estimate of what those pay requests for construction projects coming in as well. So we are, that amount has gone down dramatically. Use reserves. I talked about the market value increases and decreases. The first quarter, we had an increase in market value of $129,000, and the second quarter, we had an increase of $113,000. So we will go back and look at that miscellaneous revenue to see and verify that that is a contributing factor. It, I'm sure, was a part of it. It may not have been the total amount, but we will look at that and get an answer back on that as well. Any questions on the investments or the investment portfolio? Getting into the general fund, we talked about the property taxes and the delinquencies and a little bit about that in David's presentation. Property taxes come in at the very end of June and the beginning of December. Those revenues, and so we do have a $4 million cash flow reserve. If you'll see the major revenues there of the intergovernmental transfer, the general property taxes, and the other financing sources, which David had pointed out, the majority of those come in twice a year. And so that's why, one of the reasons why we have the reserve for cash flow that I mentioned. We have received the quarterly cable on the franchise agreement is included in there as well. That comes in quarterly. We've only received the first quarter. They have 45 days after the quarter in order to submit that to the city. So those 3 items under general property taxes is the tax levy and the franchise agreement and any kind of delinquencies which are somewhat minor. License, and I should mention that we should be, if it would be monthly, it would be at 58% is where you would be at the 7-month level. Now, not all of those, again, this is an example where you would not be at 58% because of the timing of how the revenues come in. They come in twice a year, so 50% mark is where you would be looking at. Other items, licenses and permits. The big items there are building permits and licenses. Because they are issued in the beginning of the year, again, you're not going to be at that 58%. You should be higher than that because of the timing on when licenses are issued. Building permits are at 98% of where we had estimated. We had estimated at $250,000. Conversations with the building officials there are a number of permits that are pending that will put us above for 2017. In conversation asking about 2018, there are a number of items also that are on the forefront that would not happen until 18, but those are items that we will review and recommend when we're dealing with the 18 budget, and so you'll have further discussions as well. And this will be one of the items, again, that we will update as we go forward for the 18 budget.
Steve, if I could interject here, based upon the time and I looking ahead and I see all the slides, let's not go line by line. If you'll just kind of summarize, we've got about 3 more slides. I want to leave time for Sean.
Okay.
Thank you.
Yep. We talked about the intergovernmental, that's LGA, school liaison, and police aid. Again, a timing issue on that as well. The school liaison and police aid they come in after July. Service charges, there are primarily civic center and aquatic centers. The aquatic center, and you'll see that on the expenditure side as well, it has not had a stellar year because of the weather. But those are items that we take into consideration. And under public safety, for service charges, we have fire contracts and the C6 task force reimbursement that we have for staff that are allocated to that. Miscellaneous revenue accounts for our interest earnings. And this is where there's a clearinghouse that David maybe talked about, and we've talked about it at a staff level of maybe reallocating this. It's an offset in the revenue side and the expenditure side for refunds and reimbursements and insurance pass-throughs. It's in the neighborhood of about $500,000, and we could account for those outside of the general fund, and we're looking at that and what kind of effects it have. It's revenue neutral. It comes in, it goes back out. We have to account for it, but maybe we need to account for it somewhere else rather than the general operating fund. And then the other financing sources are our municipal utility, intergovernmental transfer. It's basically our enterprise funds, waste treatment, and we transfer in to cover some of the administrative costs to deal with those types of departments. One other thing before I leave this slide that I could just mention, and I know Mr. Peterson from the coalition is here and will speak to it later tonight, but the state has done an allotment on LGA, and we have a history that we'll be talking to you about during the budget process as well. Under the expenditures, under the general government and the public safety, I just want to point out a few things. We'll be looking at some issues with the administrator budget due to the interim administrator, and we'll be bringing some budgetary requests or resolutions similar to what David had mentioned, that department may go over by the end of the year. The assessing department, that one you'll see is already over. We noticed there that we do have a contract with Candido County, but there was a small amount of workman's comp. Because our workman's comp policy runs from June 1st of 16 through July 1 of 17, there's a small amount of workman's comp there that we have to look at and review to bring that one back in line or ask the council to amend that departmental budget by a slight amount. The other items that, if I could mention real quick, I talked about the clearinghouse and the non-departmental. The police department, the council had added some positions. It looks like we may have a half a year of position vacancy. They may not have them all filled until the first of the year. The fire department, we're at 53% of their temporary, their fire calls. And so that one is kind of based on the amount of fire calls, and that one, that number is budgeted at 200,000, projected to possibly go up for next year. Engineering, again, they've had a vacant position for the first 7 months, so that will account for some possible extra money there. Public Works, that is a timing issue on maintenance during the summer months. The non-departmental general government is for the civic organizations. That, again, is you wouldn't be at 58% because you usually give that upon request, and there's one that gets it monthly. Transfers, again, capital transfers, airport debt, and street.
Can I ask a question?
Yep.
Did you explain why there was the 122% on the office services?
The office services is, in 17, the way they used to handle office services is that they had a central stores where the departments would buy from the central stores and then get charged. And in the budget process, they've created the department, and then the office supply line items will go down in the various departments. And so this is a transitional period in that they didn't quite know how much activity would be in there.
So are they using more office supplies than they used to then, with individually now going? Wouldn't it have been the same as years past, kind of?
The amount of activity should be in the I don't believe the activity has increased. I think that was just an item that was under budgeted because they didn't know exactly how that would the mechanics how it would work. And there are some departments that are off-site that don't use that. So we're looking at that in the 18 budget process and increasing that one. I talked about the engineering, public works, RAC 8, the library, that's 2 times a year. It's 2 payment, half to the county, and then the Pioneer Land Library System. Auditorium is under at this point. Overall expenditures are at 43%. Again, they should be at 58 if that would be where we would be. The waste treatment plant, the first item there, intergovernmental. I checked with the superintendent of the waste treatment plant, and this is for the leachate that the plant treats. They had anticipated that Candy White County would not be bringing the level to the plant. That has not materialized. They've also picked up Renville County and Cottonwood County. And so there is some discussion about the counties putting in some pretreatment out there, and so the strength and the volume would be less moving into 18 is what his conversations have been. And so that's, again, a recommendation that we didn't anticipate any, but we are getting that for the first 7 months. The service charges, we are working with the municipal utilities. They changed their process on they do all the billing for the waste treatment for the city, and that they changed to the actual amount collected versus the amount billed, and so we're working through that process. And this is for 5 months, not because of the time delay that they collect it and then turn it over to us. Miscellaneous revenue, again, the revenues there are for interest earnings primarily. Treatment, you'll see all these departments are below. Major factors in treatment are the chemical usage is down, that's at 29%. The debt management, again, we just paid that in August. That was at 9% when this report was prepared. Interest of $1 million, again, was paid out this month. Transfers to the capital and general fund is kind of dictated internally. We haven't done any transfers yet. That allows the waste treatment plant to gain the interest allocation from the investment portfolio. Collections, depreciation on all 3 of the divisions have not been recorded. That's a process that we're going to be changing to do that quarterly instead of at the end of the year. And then biosolids, Land applications in the fall is a big item there. Two other factors, if I could just mention, at the last meeting, the council talked about the insurance. We talked a little bit about the insurance deductibles, and we're putting together a final report there. But we have been periodically increasing the deductibles. They're presently 100,000, 200,000 aggregate. That was put at those levels in 2010. At that time, we had a $20,000 savings on the premiums. Prior to that, the year prior to that, we had 100,000, 150 on the coverages. That at that time saved 23,000 in premiums. Prior to that, we were at 100, 100 in 2003. At that time, we had a $30,000 savings. And prior to that, in '89, when we went to 25, 100, the premiums went from 224,000 annually to 147. And so we'll be bringing back also any kind of major claims, and that's where the city has been able to build $1 million reserve, is by those savings plus not reaching those deductibles. And so now we have value in the report. We'll have more value. We'll have that information of what coverages we have, what kind of value in comparison, and those types of things. But we're still working on that. And the other item of information I just want to point out quick is the agricultural exemption. The council just collected a big portion for agricultural exemption. There are still 5 parcels remaining with agricultural exemptions in the amount of $467,000. One of those is the major, is at 68% of that number at $318,000. So just that is a bit of information.
Council, do you have any questions? Councilmember Metzger.
I don't have any question. I think it was very comprehensive. Can we get a copy of your PowerPoint?
It's in our packet. It's page.
Wasn't even following along. How
It should be included in there, as well as the financial statement is on the city's website for those citizens who may be watching. It's been there since the end of June. It's a lengthy document, I understand that, and sometimes that's why I just pointed out the different sections of it to concentrate on.
So if you look at page 340 and go backwards from that, so the first reports are all the Rice, the ones that we get all the time, but his report actually is at the end of that document. So thank you for your comments and your report. Next, we have Mr. Sean Christensen, our Public Works Director, Public Works Project Update. You're not going to get very long here. You have about 3 minutes.
All right, I'll take 2.5. So I think what we'll do is I'll work together with IT here, and we'll get some pictures up there, and I'll just explain the projects as you see the pictures so that we have some visual aids as well, kind of give you some updates. The first couple, I believe, are the first intersections. This is First and Willmar Avenue for those that are quizzing my ability to look at the picture and choose that. Willmar Avenue was opened up and painted, as you can see, I believe a couple weeks ago. And then I think the other picture, the next picture there is, yeah, that's Litchfield intersection, which was opened up this morning. And so provided the pavement is dry enough tomorrow, that it'll get new stripes on that intersection. And those should go into punch list items at that point, where there'll be maybe some behind the curb seating and some other items that need little touch-up things, but for the most part, they will be open to traffic now for the duration, and those were completed. Actually, that project was about 3 or 4 days behind our initial intent for that, and so virtually right on time for those projects. This project is, if you recognize the school in the background, this is the 23rd Street Trail project. It is awaiting pavement. It's been graded and cut and graded. I actually think I have a couple pictures of that, and a lot of these comments were based on progress meeting we had last week, and unfortunately the unexpected rain today may have changed these dates a little bit. The intent for that trail was to be paved this week. Again, we'll have to wait and see if that dries out enough to accomplish that, because they're going to bring pavers in to finish some other projects. Another one as it ties into the street, as mentioned, or if you remember, that that project was intended to, or that trail was intended to come in perpendicular to 23rd Street, and so that's looking northwest, if you will, from the center line of the street. This is Lakeland Drive, and if you've been on that, it's taking shape rather nicely. And because of the rain today, unfortunately, we would have been completed with the paving of that today, but there's, I think, a run and a half left to finish the final wearing course of pavement on Lakeland Drive. And that would include everything, including the turn lanes that were added at the school and the YMCA. And as you can see in this picture, the driveways, drive approaches, pedestrian ramps, new curb and gutter. This project is nearing completion. Outside of striping, again, we'll pave that this week if the weather will cooperate a little bit with us, and then it'll be striped within days after it gets its final wearing course completed. Back to that one second, please. Yeah, so this, now I can't remember what I was going to say. Dang it, had it all together too. Oh, that one is ahead of schedule. It was actually scheduled to be completed the end of this month, so August 31st. So we're ahead by, a good 10 days or so on that one, or at least a week by the time we get completed with that one. Okay, now we can go to the next one. Thank you. So this is Rice Park, and I know it's not part of our improvement project, so to speak. And so, Steve, if I misspeak on something, you can chime in. But this is a picture you can see in the background, the shape, taking shape of the splash pad, or what will become the splash pad. And today, of course, it was a splash pad, and muddy one at that. But there on the right side of the screen of that picture is the pad for the building itself, the structure itself. We're awaiting the brick, which we had a little hiccup in some ordering, and actually not the ordering was not the hiccup, it was the delivery that was. And so upon delivery of that brick, that'll take shape rather quickly. I think I had a couple of these, just another angle of that, looking west there, with Rice Avenue, or Candy Ojai on the east or the left side or right side of the screen there. So is that about it for the pictures? I think it might be. So the only one I did not cover then would be the 16th and 17th reconstruct, because as you can imagine with the rain today, those pictures looked rather muddy, and so it didn't show much. But as far as the project meeting went last week, the sanitary sewer has been completed south of 13th Avenue down to 15th, and they're continuing on the water main on 17th Street. And they're expected completion of that by end of last week. I don't think they made that because of the wetness. And we're working on the storm sewer and drain tile. The anticipated deadline for that was completion by this week. And then we'll continue with curb removal and milling. And then we had hoped to get all that done by the end of this week. Again, with the rain, that might be delayed a few more days. But the completion date on that, I think, is November 1st. So we've got some time yet. And again, asking the residents to be patient with the mud and the chaos in front of their houses potentially. But we'll get through this, and it'll be a great project when it's completed.
Great, thank you.
Any questions?
Comments from the council at all? Councilmember Plowman?
Thank you, Mr. Mayor. Quick comment. I don't know whose idea it was or if it was in the plan, but the black poles on the First Street intersections, I think they look awesome and really sharp. I noticed them right away when driving by, and I think anything we can do to continue on that avenue, no pun intended, but
Not a street?
Yeah, I think it looks really great. It adds a real nice aesthetically pleasing look, and so I don't know if there's more of that planned in the future, but it would be great.
Yes, there was a combined effort with some discussions with Administrator Holland, and we were able to get that taken care of. The plan would be to continue that if that's the desire of the people that matter, I suppose, is the way to phrase that. There are some mixed feelings about that color in the office, but yes, I think more than anything with the new paint, they look good.
Shauna, could you just touch briefly on the painted signal box? I know you've covered it at least once before. I know you had it on your Facebook, the city's Facebook, and I know last week, the end of last week, it was splashed pretty heavily through the City of Willmar Facebook site. Could you just touch on that a little bit? We have had some questions from the public in regards to that, and I know I'd sent you an email on that, and you responded nicely to that. So if you could comment on that just a little bit.
Sure, and it's, in addition to those postings, it's been on the Public Works Twitter page and some other things to try to get some publicity for that. That was another collaborative effort that we had with the Arts Council. The Arts Council actually approached me and asked if that would be possible, and this has been over a year ago, I'd imagine, at this point. I could get some actual dates, but in general terms, that's probably about when it took place, those conversations. I looked into it. There's a lot of, I shouldn't say that, there's a number of cities around the nation that do that. Some of them go as far as to paint even the electrical junction boxes and transformers, but we started with baby steps, if you will, or small, and liked the idea and pursued that. And then the Arts Council came up with the designs themselves. They had different proposals. That was all internal to them, and all we asked as the city, or all I asked, was that we got to somewhat approve those plans or those drawings before they were completely public, in case there was some glaring issue that we saw, which we did not. And they had those on display publicly at the barn, if you remember, probably a month or so before they started going up. And yeah, they got all but probably 2 or 3 of the cabinets that are controlled by the city covered with those skins, is what they are. Which the artists designed that, and then it's sent to a manufacturer of those skins that are, and then they're slid over the top and kind of shrink wrapped on there, for lack of a better way to explain that. They're a little bit more durable that way, and the artists are responsible to maintain those, I believe, and I don't know the exact time frame, but they're responsible to maintain their designs effectively. So. Yeah, I think they look great. I think most people I've talked to either weren't aware, or when they started seeing them, then have now driven around and tried to find their favorite. So,
Sounds good. Thank you very much. Council, any other comments? Okay, we will, Councilman Christensen.
Thank you, Mr. Mayor. Just wondering, Shauna, if we have any more 100-year rains scheduled this year?
you know, I was gonna lead off with taking responsibility for making the entire day this 85% eclipse, you know, with the clouds. So, I'd take responsibility for scheduling those clouds. But no, I think I've held off the scheduled 100-year rains for a few more years anyway, at least until all of us are gone, but no guarantees.
And again, we'd call that a 0.01% event, correct?
It's a 1%, no, 1% event.
A 1% event. So it was a 1% event is what we had. So thank you very much. Appreciate it. So, okay, we'll stand adjourned till the next meeting.
Pardon me?
I never expected this one.
I didn't either.
I was going to ask.
And yet they really